didn't work.
Right. Same.
Oh, man.
Stephanie, do you want to share a little bit about your background while we wait a few more minutes for everyone to hop on?
Sure. I am from this area, went to Radnor High School. My son goes to Radnor High School right now. Well, not actually to the high school, but hopefully he's about to graduate. But this is a second career for me, becoming a financial planner. I was living in Washington, D.C., decided with my husband that if we wanted to have kids, it might be nice to be near all the grandparents who are up here. So we moved back, and then I joined my father's financial advisory practice almost 23 years ago. So I started out kind of helping people with retirement plans and that kind of stuff. And it took me a while to feel like I knew enough to be able to help people kind of one-on-one. You know, I was so kind of anti-sales. That's not my thing. But I did finally kind of discover kind of a whole vein of financial planners who are very holistic and kind of more, you know, really focused on like, what's important to you? What are you trying to create in your life? That kind of stuff. I was like, ooh, those are my people. So yeah, I started my business, Sofia Financial, in 2011. It's just
Love it.
Just a couple of years ago
Stephanie
now.
And I connected through the Walnut Club, a women's networking organization. And Stephanie, what I love most is you're very real. You know, there's not a lot of fluff. You know, you're very easy to open up and be honest with. You know I've personally come to you with some questions that seem silly to me, you know, but, you know, you've always handled them, you know, great and made me feel really empowered. So thank you so much for spending some time with us today to share about these topics that we probably should be talking about, but we all totally avoid.
Yes, totally. No, I'm thrilled to be here. Thanks, Dana.
Yeah. So why don't you go ahead and get started? It's 11:06.
All right.
And I'll let you have the center stage.
Sounds good. I just have a couple basic slides, and I promise I'm not going to overwhelm anybody with charts and graphs and numbers and all that kind of stuff. That's not my thing. I put this workshop together a couple of years ago, just kind of feeling like, you know, there's still this strict taboo against talking about money. We're not supposed to talk about it. It's not polite. I remember being told as a kid, like, do not ask your friends, like, what their parents make. Do not ask anybody, like, how much they paid for something, besides maybe, like, a piece of clothing. You know, you don't, like, how much did you pay for your house? Maybe some of those things have broken down a little bit, but I still feel like there's this huge taboo, and it's a problem because we don't learn about this stuff in school. My high school, they offered an accounting class. Okay, that's nice. I have people who have MBAs who still said they didn't learn any personal finance, you know, how to deal with your own money stuff. And most of our families, you know, don't necessarily talk openly about it, so we didn't learn from our families. You know, some of us learned a couple lessons here and there, but not the whole picture. And then again, if we're not allowed to talk about it with our friends, that cuts off another area of learning. So I feel like a lot of people, in my experience, a lot of women, but a lot of other, you know, a lot of just regular people get into the spiral of, we make a money mistake, we tell ourselves we're really bad at this stuff, and then we kind of spiral down from there, right? Like, oh my gosh, we feel the shame and guilt, and then we try to avoid it. I have, you know, one client in particular I'm thinking of who's totally a head in the sand kind of person. She doesn't want to do any of that forward thinking stuff. She just kind of wants to hope that it's all going to work out okay. And that's not always the best plan. So this is designed to be interactive. You guys are welcome to ask questions anytime, share your own personal experience. You're not obligated to it all. But I would just love, I can't see most of you, but if it's okay, I'm going to ask everyone to hold everything that people share confidentially. I know that it's going to be recorded, so keep that in mind if you do decide to share. But, you know, this is all personal stuff, so like, let's make this a kind of a safe space to have the conversations and realize that everyone makes these mistakes. The other thing I got really excited about that I learned about a few years into being a financial advisor was this whole field of behavioral finance and neuroeconomics. And there's research showing that human beings are bad at money. Like, it's how our brains are wired. Some of the things that helped us evolutionarily, if whatever that word is, actually don't help us in the financial world. So when I share those kinds of things, people are like, oh, it's not a character flaw that I bounced a check. No, it's not. It's a lot of our brain wiring. So that's really important to realize too. And then just my last introductory comment is that the most important things to know about money, you totally have access to, because it's all about getting in touch with what's most important to you, what your priorities and values are, and your life that you're trying to create for yourself. What does money mean to you? What feelings come up for you? If you have a bunch of money in your bank account, how does that make you feel? How then might you act upon that? Or if it's getting really low and you're getting anxious about that, notice those patterns of how you feel, how you think, how you act in those situations. That's super important. Because starting to notice those patterns really starting to bring some awareness, some mindfulness and intentionality to our money. Even if we don't want to be those people who are looking at spreadsheets all day long, just being a bit more mindful really can help us out. So I don't pretend to have all the answers. That's why I love this group format. At any time, please unmute yourself, pop on in, ask a question, share your own experience or tips that you might have gathered along the way. I think that'd be awesome. Okay, so there's a guy who has a column in the New York Times called The Sketch Guy. His name is Carl Richards. He's a former financial planner. He does these little Sharpie drawings, and I think they're great. They capture so much of, what it is to be a human being and have to deal with money. But this is my favorite one. No shame, no blame. Whatever, stuff you have in the past about money, don't worry about it. Don't beat yourself up. Like I said, there's a lot of, I think, environmental factors, but also psychological, behavioral, biological factors on why human beings struggle with this stuff. So we're not going to worry about that. So I've structured this as the 5 topics that we avoid around money, but that we really shouldn't. And the first one I usually talk about is looking at how much you make. Now, I know you guys as realtors, it's not like you're negotiating a salary, right? Or, get a job offer and then you negotiate a salary. That's not really how that works. But there's a lot of research to show that, first of all, what you make has a huge impact, not just on your own life, right? I talk to a lot of people who feel like maybe it's selfish to push for a little bit more or to go for more. It's not, because you're taking care of yourself. You're often taking care of others, whether it's family or community, right? When you're financially stable, you can do more in the future. And then the other thing to think about is whatever your feelings are about Social Security, whether it's going to be there or not. I believe it'll be there, maybe in a changed format. But your Social Security benefit in retirement is tied to how much money you made during your career. So that's another reason. Like, it's not just short-term stuff that you want to look at. There's a lot of research showing women especially fail to negotiate, fail to advocate for ourselves. We don't ask for that raise. We kind of sit back and think, oh, someone's going to notice me. I think perhaps in your situation as realtors, it could be more, Dana, is it true that you can offer a discount off your commissions?
We can.
You can, right? So that's something to think about. And I know this isn't something just to women. Women do often underprice themselves, but I've seen males do this too, right? I joined my father's business 23 years ago. He would discount his own services before anybody even blinked. I was like, what are you doing? They didn't ask for a discount. Why are you discounting yourself? So kind of pay attention to that. Are you maybe discounting when you didn't need to? Is there a way to maybe go for, those bigger properties, those bigger paychecks? Because really, it does have implications for your future freedom of choice, right? That's kind of what I like to think about. Many of us grew up with kind of this internal script about money, that money is the root of all evil, wealthy people are bad, right? All those kind of negative connotations around dollars. But if you notice that that's something that you tell yourself, maybe flip it in that, okay, if you have more economic power, how would you change the world? What kind of things would you do to make an impact? And then that freedom of choice, right? Having the options to say yes or no to an opportunity that might come up, to take time, take time and do something you really love to do and not feel like you have to be nose to the grindstone all the time. It really is important. Anybody have thoughts on this, kind of how much you make and how it fits into your own personal experience?
I mean, this is Dana. I can definitely say when I first started in real estate, I felt definitely like obligated, when I would meet someone, if they would even waver a little bit, like, what's your fee? Oh, is there any negotiation? I'd be like, of course there is. Whereas now I definitely like value my experience and my education. So I'm a little bit better about talking about why I'm worth, the fee that I'm charging.
Good. That's awesome. Anyone else have anything they'd like to share? One thought on the whole kind of pricing your own service that I really liked. A guy was talking about how most people kind of come at it, and this again is slightly different. Maybe, if people are charging hourly, they look at how many hours is this going to take me, and then kind of come up with their fee from that. And this guy was flipping it and saying, instead, think about how many hours you're saving the other person. Because of your experience, your knowledge, your training, you are saving this person, number one, from making huge mistakes, right? But also if they wanted to get themselves up to speed, that's a huge commitment of time. So to trade the dollars, even if something's not going to take you very long, it's because of everything you've done up to now that you know how to do that. So don't discount yourself because maybe something is easier for you or comes more naturally for you than it was to someone else. It's a huge, think of the value to the person you're delivering it to. All right, I'm keeping an eye on the clock. I want to make sure we get to all the topics. The other thing on how much you make is, and I know people in real estate do this quite a bit, but thinking about having those multiple income streams. Is there a way where over the course of your career, you can build in money coming from different places so that if one source blows up for some reason, you have others you can rely on? And then also when we get to talking about retirement, whatever that might mean for you, any dollars that are coming into the picture during retirement means that's dollars of your own savings you don't have to be spending to support your lifestyle. So what you're making in your main source of income, but also how can you diversify? How can you find some other sources of income perhaps? And maybe it's even just other sources of referrals or business or partnering. I don't know what it might look like, but kind of plant that seed so that you can think about what that might look like for you.
So yeah, with Keller Williams, we're lucky because we have profit sharing by referring new agents to our office. We have the opportunity to invest in our title company and get dividends. We can also refer clients that maybe are buying in different states that we don't work in, and then repeat business too.
That's awesome. Yeah, thinking about how can you kind of cultivate each of those streams is really probably worthwhile. All right, topic number 2, everyone's favorite topic, understanding where your money goes. Of course, this is the spending side of the cash flow equation, right? How much you make is the money coming in the door. Where your money goes is how it goes out the door. And I have to say, like, after 23 years of doing this, most people I work with, they don't know where all their dollars go. It's so easy, especially now in this economy we live in where things are invisible, right? You can set up an auto pay and then not even realize it's happening because everything's paid online. You pay your credit card online, you don't even see it going on. So bringing some awareness to where your money goes is super valuable. And I like this little image here of Carl Richards. How can we align our spending with our values, with our own personal values? as opposed to kind of whatever messages we get in the world that say we should spend money on a certain thing. The key to financial stability is making more than you spend so that you can build up some wealth. You can build up things like an emergency fund, some investments, things that are going to help you in the future or when unexpected things happen. Because let me tell you, unexpected things are always going to happen. So how can we plan for that? And I know in the real estate world, you're dealing with uneven cash flow, right? You're not getting a steady paycheck a couple times a month. So that makes it especially challenging to plan for that when you don't know what it's going to look like. I think a super useful tool, and Dana's heard me talk about this before, is knowing what your ramen noodle budget is. And I don't mean like the fancy gourmet ramen noodle shops. I mean like the cheapo stuff from the store. And what I mean by that is if you had to, what's your bare bones monthly spending? This is not how you want to live. This is how you could live if you needed to, right? Rent or mortgage, utilities, bare bones cell phone plan, food. Again, not eating out. Not that any of us are eating out anymore, but take out. What are those things that add up to what you would need to live on? And the thing about when people look at their monthly spending, it's really easy to forget the things that happen less than monthly, right? Whether it's gifts for your mother's birthday or holidays or real estate taxes or your car insurance, things that aren't necessarily paid monthly. You've got to work those in there too and plan for those that are going to happen. Because if you know what your bare bones budget is, then you can start to build around that, right? It's super important to start to build up some kind of emergency fund, some kind of pot of money in the bank where you can pay those bills if the income is delayed or dried up, right? I mean, I think a lot of this kind of contingency planning is coming really clear to people in our current situation with the economy, going on lockdown. So the conversations I've been trying to have with people to do this stuff now, it feels a little bit more real, unfortunately. So when you're dealing with the uneven cash flow, it's really great to try. I know this doesn't always work, but I think the goal is to get to the point where when you need to fund something, you don't have the income for that month, you're using your own assets instead of using the assets of a bank. And what I mean by that is a credit card or some kind of debt, right? Because when you're purchasing something on a credit card and not paying it back, you're tapping your future income today. And what we'd love to do, because there's a cost for that, right? You have to pay interest to the credit card company. That's why they're also freaking profitable and have all that advertising and marketing and their names on stadiums and all that stuff because of all of us. If instead we can use our own dollars, right? It sits in the bank, not earning a very much interest for us until then we need it. And then we can use it instead of tapping debt, right? That's the place to try to get to. And, thank goodness credit cards are there. They can help us get through. But again, this might be another use for your ramen noodle budget. If you are dealing with some credit card debt, how can you cut down your spending to bare bones now, pay that off, get ahead of it, and then build up some reserves so that when things happen, you've got it covered. One of the things I really like to think about in terms of spending money, because we live in a world where it's super easy to spend money, right? Even now when we're not allowed to go to stores, I can click 3 times and buy wine from my favorite wine store. Like boom, 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 done. And I've just blown my resolve for the past week. I've been really good and really frugal. And then I get an email and 3 clicks and I've spent a whole bunch of money. So it's not easy. But again, a little mindfulness and intentionality. If you stop for a moment and think, okay, what is it that I'm hoping this thing that I'm about to buy will do for me? What is the, and this is a term I'm borrowing from Danielle Laporte, who's a really cool woman to follow. She has this idea of core desired feelings. She doesn't go so much for goals as in like things you want to achieve, but how do you want to feel in your life? So maybe if it's, some new clothes that I was thinking about purchasing, I want to feel powerful and together. Okay, so if we know the feeling I was going for, maybe there's another way to get to that feeling without spending the same amount of money. So that's just another perhaps helpful tool on the spending side. Also, I saw a non-budgeting system recently that I really liked. This gentleman, Roger Whitney, the retirement answer man, he has what he calls his cash flow bucket system. So he advocates coming up with, what do you need to spend every month? And this is kind of more realistic, right? Ramen noodle is bare bones. This is, what do you spend in a typical month? And then he wants you to set up 2 bank accounts. So one for your income and then one for your spending. And the idea, and I think this would work especially well, for example, if you got a big commission check and then nothing for a while, right? You need, I'm making up a number, $3,000 a month for your living. And you get a commission check of, again, I'm making up a number, I have no idea, $20,000. The idea is at the beginning of every month, you transfer your $3,000 that you're going to need from your income account to your spending account, and you spend from there. And then you might need to adjust, maybe if you didn't get the numbers quite right. But it just makes it perhaps a little bit easier to see the difference between the income and the outflow. And then when the income account builds up a nice little amount, then you can decide, okay, how could I put this to work some other way? So I like that concept. Anybody want to share anything on the spending side? Struggles, ideas, tips?
This is Dana. I definitely struggle with this, especially I'll have a client go under contract and it might be 6 months till settlement. But during that time, I'll still be needing to spend money on marketing, settlement gifts, events, networking. So sometimes I have to spend money before I have that money.
Yep.
And that's definitely something I struggle with still as a realtor. But I think the idea of having an income bank account and a spending bank account is a really good way to kind of make it more black and white.
Well, and I think you might even go a step further and have your personal spending account versus your business spending account, right? Because
Yep.
the more you can separate your business expenses and your business finances from your personal, I think the more clarity you can get. Before I started doing that myself, I would see a decent level of balance in my bank account. I'm like, oh, I'm buying myself a new laptop. Well, that was actually money I needed to spend to, pay daycare or something. It wasn't
Right.
laptop money. So having that separation. So coming up with, what do you need to spend maybe on an annual basis on your own business, and then divide it up to monthly and try to, have that set aside. It is tough. It is tough. I know. I'm going to say that what I've discovered at 23 years of doing this, the most power that we have over our financial situation is right here on the spending side. The less you need to spend, the more flexibility you've got. Sad as that is to say. All right, again, keeping on time, I want to look at topic number 3. Putting your money to work. And by this, I mean investing. And I want to make a distinction between saving and investing. Saving is where your money is not going to go down in value, right? Opening up that savings account or that money market account at the bank or the credit union or Vanguard, something like that, you're going to earn very little interest right now because interest rates are super low. And that is okay, because the idea on your savings is that you don't know when you're going to need it. Or maybe you do know. Maybe you want to make a down payment on a house in 2 years. That's short-term money. You don't want to take any risk on that, because the big difference between saving and investing is the risk. In saving, the risk is it's not going to grow very fast, but it's not going to go down. In investing, what you're hoping is that over time it's going to grow more than your savings would. But in exchange for that, what you get is volatility in the short term, at least in the investing I'm talking about, which is more your mutual funds, stocks, and bonds. Real estate is also an investment, which has its own profile of risks and rewards. And I know a lot of folks who are real estate professionals invest in real estate, and that's fabulous. I think it's great. I would just caution that you want to be diversified in your investments. For each investment, it's going to have, an upside, and it's going to have potential risks. And you want investments that don't all have the same risks. You know what I mean? Or they're not all going to have a difficult time at the same time. So for example, in my world, when someone's building an investment portfolio, we're going to have them in some stocks and some bonds, some US companies and some international, big companies and small, right? Probably some lower risk things and some higher risk things. And that mix is going to depend on the person's situation. But the reason why we diversify like that is because hopefully they don't all go down at the same time. Or even if they do, some of them are going down a lot less than others. So Carl's little sketch here, investing done right is boring. We're not going for the things that are going to be on the cover of Money Magazine that are going to blow the lights out. Number one, because no one can predict what those things are going to be. And number two, with great returns comes the potential for big losses as well. So nothing is risk-free, right? Everything is going to have some risk to it. The key is just understanding. And if someone is trying to sell you something, please do not feel intimidated to ask the questions. I always say, you don't have to know the answers. A lot of people say, I don't think I'm good at investing. You don't have to be an expert. You don't have to know the answers. You have to know the questions to ask and have the guts to ask them. So especially in a sales type situation, when you're feeling a little bit of pressure, ask all the questions. What could go wrong? How are you getting paid, right? People ask you guys that all the time. Ask people who are selling you an investment, how do you get paid? You want to know that. Most people are not doing it out of the goodness of their heart, right? So a good first step on this is to understand what investments you might already have, you or people in your family. So you want to ask things like, okay, what type of account is it in? Because in the investing world, there are different types of accounts that have different parameters around them, mostly on taxes. So, for example, you hear all the time about a 401k plan. That is an investment vehicle that has certain tax advantages. And in your employment situation, you guys, I believe, do not have a 401k available to you. But a lot of people, that's their main investment vehicle for long-term, for retirement. You can have an IRA, individual retirement account, that has certain rules around it. You could have just an investment account, whether it's in your own name, in joint name with a spouse or partner, right? So sometimes I'll ask people, okay, what investments do you have? I have an IRA. That doesn't actually tell me what investments they have. That tells me what kind of account it's in, which is important because it's when you're allowed to tap it and how it's going to be taxed. But then you have to go a level deeper. What's actually in the IRA? Mutual funds are in the IRA. That's good. But again, we don't actually know the risk profile of what's in there because they're mutual funds. There's like 30,000 different mutual funds. So is it a more aggressive mutual fund? Is it more conservative? Are there stocks in it, bonds in it? What's the expense ratio? All those kinds of things you want to ask. So I did want to spend a minute on the investment options that have some tax advantages for folks who are paid by 1099, which I presume is most of you. So because your employer doesn't have a 401k because you're not getting that regular paycheck, right? You can open an IRA yourself, an individual retirement account. And again, pay attention to the word retirement in there. The rules around that are that you can't actually take the money out of an IRA before age 59 and a half. Congress always does the half thing. I don't know why. If you touch it before 59 and a half, you're going to get a penalty. You're going to owe tax and also a 10% penalty. So that yet you really want that to be long-term money. And then the flip version is called a Roth IRA. Senator Roth from Delaware came up with it a bunch of years ago now. Oh, sorry, I missed one important point on the IRA. The nice thing about the IRA, there's a limit to what you can put in every year. The limit this year is $6,000. Unless you're 50 or over, then you can put in $7,000. That money is tax deductible. So you don't pay federal income tax on whatever money you put into your IRA. That's nice, right? So it's like I earned $6,000 less this year in terms of calculating my tax bill. That's the good side. The bad side is when you get to retirement, when you take that money out, you're going to owe income tax on the whole amount you take out. So let's say your $6,000 grows over time to $20,000. Let's say income tax rates go up from where they are now, right? All that money is not yours. Some of it belongs to Uncle Sam. So a Roth IRA is nice because even though you don't get a tax deduction going in, so I put my $6,000 in, I still pay income tax on that $6,000 this year. But when I get to retirement, I don't owe any tax at all. If my $6,000 grew to $20,000, like my previous example, I don't owe tax on that $20,000. It's all mine. So hopefully each of you works with an accountant or at least has someone to kind of advise you, because you could have variable income year to year. So the type of contributions you make year to year, you might want to switch it up, right? In years when you're in a higher tax bracket, maybe because you had a couple really great sales or a bunch of great sales, the tax deduction on a regular IRA is going to be more valuable to you because you're in a higher tax bracket. And maybe in years when you're making less, maybe a Roth IRA is a good idea because you're not paying as high amount of taxes on that money you put in. Either way, I'm a big fan of having some money in Roth accounts when you get to retirement, again, because it's all yours when you get there. Just one other thing on this for you all. You can open what they call a solo 401k. So that's just a self-employed, single person. Be careful, make sure you don't have any employees that you're actually paying wages to. But if you open up a solo 401k, you can put in $57,000 and it's all tax deductible. So again, if you've got a bang out year and do amazingly and your accountant's like, hey, you really probably should be saving some taxes this year, maybe a solo 401k makes some sense at that point. So lots more details on that, but just to give you kind of an overview. Any questions on the invest side of things? Nothing? Anybody done the IRA, Roth IRA thing? Yep. Good. Good. Always when someone asks me, okay, I've got some extra money, what should I do with it? My first question is, do you have that emergency fund, right? Make sure you've got some cash stashed away for the uneven times, for the unexpected stuff. All right, this is a really joyous thing to think about. Personal finance topic number 4, thinking about what happens if you're gone. And really, there's 2 pieces to this. One is whether there's anybody who's relying on your income, right? If you have kids, if you have a spouse, if you are the primary breadwinner, or just providing support to someone financially, then you might need some insurance. So life insurance, if you're the primary breadwinner and your family's counting on you to bring home the dollars to support lifestyle, say for college, whatever it might be, life insurance is a very kind of cool financial, not cool, it's cold, it's unemotional, right? It's a financial transaction. If you're gone, nothing can assuage the emotional trauma that your loved ones are going to go through. But if you can avoid putting a financial disaster on top of that, that's what life insurance is for. For those things that are maybe unlikely, but would be financially devastating. That's what insurance is for. So life insurance replaces your economic value in the world, right? There's a cold kind of a concept. How much money might I earn over the rest of my career? Do I want my family to be able to pay off the mortgage if I'm gone? Is there some college savings to be done? Like those, that's the kind of questions you ask when you think about how much life insurance do I need? And then there's another insurance that's really important too, disability insurance. So disability insurance actually isn't if you're gone. It's what if you're too ill or you're injured and you can't work. So you're still around, you still have bills and expenses, but you have no income. That's what disability insurance is for. So you go to a company, disability insurance is rather expensive because people use it a lot. It's very often used, right? Think about a car accident and someone has a lot of rehab and can't go back to work for a few years. Disability insurance kicks in. Or cancer treatments, or, it can be a mental and nervous type of problem. So disability insurance, I'm a big fan of. So that's the kind of the financial protection. And then the other side of this one is if you're gone, literally gone from this earth, who gets your stuff, right? So this is the estate planning. If you have things you own, then you might need a will. A will is also important, very important if you've got minor children, because it will name who becomes custodian or guardian of those children. That is crucial. And then the other documents that your attorney will help you do when you do your will are your powers of attorney. Let's say something terrible happens, you're in that car accident and you're medically unresponsive. You can't answer questions and pay your bills and take care of things for you. So powers of attorney name someone else to do those in your stead, to make those legally binding decisions for you. So that's pretty important, right? There's a healthcare power of attorney where someone will talk with your doctors and help make healthcare decisions, a healthcare proxy, sometimes it's called. And then also a regular old power of attorney who can oversee your accounts and those kind of things. So unpleasant to think about and so crucial. Please get all these documents in place. They really are important. And then the other thing is, if you are likely to be the person appointed for someone in your family, for example, my parents, right? I am overdue with having that conversation with them. Years ago, they told me where the will was. That was a long time ago. It could have moved, right? I need to have that conversation with them. Where are these documents? How do I find them? Where's your stuff? What are your intentions? What do you want me to do? Again, this is the stuff that's so easy to put off. I've seen clients be like, oh, we'll talk about it at the holidays. And then after the holidays, oh, did you have the conversation with your mom? Oh, it just didn't feel, it was such a joyous time. I didn't want to talk about this. So bless you, Dana.
Thank you.
It's super easy to put off these conversations, and it's really important to do it. Anybody have anything to share on this topic? Any stories, tips?
I can definitely share. When my father-in-law passed, it was a mess trying to find his will. So definitely it's a conversation I need to have with my parents, because I do not want to go through what my husband and his family went through trying to find that will.
Yep. And then, is it the most up-to-date one, right? I mean, there's all kinds of things. Think of this as a gift to your loved ones. Anytime you get these kinds of documents done and put in place. Yeah, not always such a fun thing. Okay, I'm going to go to the next topic. Facing the unknowns of retirement. I know some of you on here are quite young, so retirement might seem impossible or so far away, but the way I think about retirement is the freedom from the need to work for money. So wouldn't it be great if you can get to that point where you no longer have to go to a job? You might want to, you might love your job and want to do it, but again, that freedom of choice thing. Or some of you might have heard of the FIRE movement, financial independence, retire early. Some people say, hey, I do not want to work like crazy until I'm 65, 68, 70. I want to have freedom of choice sooner. So there's a whole movement of people who save radically huge amounts of their income. Many of them invest in real estate. And then they get to a point where they don't have to be working. There's also a concept of serial retirement, right? Like, why wait until you're old to do all the fun stuff? Set yourself up, and you guys might be in a profession where this might be easier to do if you structure it and plan it ahead of time. Set yourself up and take 6 months and go live somewhere super cool once we're allowed to travel again. Or, whatever that might look like for you. I have a client whose daughter's having a baby. She's taken 6 months off to, be the childcare for her granddaughter. She's beside herself, so excited. And she's in a position where she can do that. So think creatively about what retirement might mean for you. For some people, it's, I really want to work for a nonprofit. And I know the pay and benefits is going to be a lot lower. So while I have a higher income now, I'm going to sock away my future money so that I don't have to worry about saving when I'm at my lower income, right? Whatever that means to you. One of the big challenges that we all face is that longevity is really high. There's been, a lot of medical advances. People are living a lot longer than they used to. So when Social Security came into being, I think it was in the 30s, the retirement age at that time was 65, and the life expectancy was lower than 65. So most people didn't actually live long enough to get a Social Security benefit. Well, now full retirement age for most of us is 67 for Social Security, and we're living to be 80s and 90s. Is that realistic, right? So thinking about how to build up some assets for retirement, thinking about those income streams, that's really, really important. I could go on about this one. Let me ask for more questions because I want to make sure I hit what you guys wanted to hear. Feel free to mute yourself and jump in. Nope. All right. So yeah, I like this little image here, like the where are you today? Where do you want to go? If you're in a relationship, a long-term relationship with someone, have these conversations, right? I know couples who've they keep working towards the thing called retirement, but they never talked about what it means to each of them. And maybe one wants to go live at the beach and one wants to travel the world, right? Like talk about what you want this to look like. And then the next question is, what's it going to take to get there? There's a terrible statistic that I share all the time. 80% of men die married. 80% of women die single. So ladies, think about that. At some point, most women have to be the sole financial decision maker. So that's an important thing to keep in mind. In the old days, we used to talk about the three-legged stool of retirement income, which meant one leg of the stool was Social Security. One leg of the stool was a pension plan, because in the old days, like my grandfather had a pension plan from his company where he worked, which meant his company paid him a check every month for the rest of his life and the rest of my grandmother's life too. She lived to be 100. They were having a party after she passed on. Pension plans are very scarce anymore, right? There might be some teachers have some municipal employees, but financial planners don't have them. Real estate professionals don't have them. So that part of the three-legged stool is gone. The third leg of the stool is our own personal savings, what we put together for our future. And it could be rental real estate, properties that are going to pay income, right? Think kind of, broadly about what those assets are that can provide you the financial security. There's a cool, there's a retirement researcher who's actually local to our area. He's in the American College of Financial Services, which is in Bryn Mawr. And he, instead of thinking about one giant retirement goal, he kind of breaks it up into what he calls the 4 L's, which I think is kind of helpful. So his idea is that you want to maximize your spending power, which is your lifestyle, right? So you want to have a nice lifestyle. So that's kind of your regular spending. No matter how long retirement lasts. So that's the longevity piece, right? You could live to be 76, you could live to be 113. it happens, right? So you got to try to plan for something about that longevity piece. For some people, it's very important to leave assets to subsequent generations. So legacy is the third L of that. Is it important to you to leave something to children, to a charity, to a community? How are you going to put that in place? And then maintaining reserves for those unexpected expenses that I've mentioned so many times, right? So liquidity is his fourth L. So it's lifestyle, longevity, legacy, and liquidity. And again, that legacy may or may not be important to you, but when you're thinking about retirement, saving up assets, you can think about, okay, which assets are going to do which jobs. There are lots of financial vehicles out there, and none of them are perfect and none of them are terrible. They can be used in terrible ways, right? In my industry, there are quite a few people who are incented on commissions for sales, right? So these tend to be the folks who do the rubber chicken dinners. Usually when you're invited to a free dinner, they have one certain product that they're trying to sell, and it pays a big commission, which is why they can afford to buy the rubber chicken dinners or the steak dinner or whatever. So the trouble comes when, one particular product is sold as the solution to everything. That's never the case. What you're going to want to end up with is a bunch of things that cover each of these goals, right? On the longevity goal, Social Security will pay you as long as you live. As I mentioned, we really don't have pensions anymore. There's this thing called an annuity contract, which is from a life insurance company. It's kind of the flip side of life insurance, right? Life insurance covers the risk that I die too soon, that I die before my kids are through college and before my husband's paid off the mortgage, right? And he loses the benefit of my years of earnings. An annuity covers the risk that I live too long. An annuity basically is like buying your own personal pension plan. I hand over some money to the insurance company. This is the plain, simple version of an annuity, which to me is the best kind. But in exchange for handing over some money to that insurance company, they're going to pay me income for the rest of my life. And I might get out less than I put in if I die sooner. And the company uses the extra dollars to pay the people who live longer, right? If I live to be 113, they're on the hook. They got to pay me for the rest of my life. So that, right? Annuities get a bad rap because often they're sold poorly, unscrupulously, but they cover one of these risks that we've got for retirement. The other piece that people need to think about is healthcare, right? The healthcare expense. The inflation rate for retirees is actually higher than the inflation rate for everyone else because the things they tend to spend more of their money on go up in cost more quickly. So healthcare, and then the other piece I'll just mention is long-term care. You might have heard of that. Long-term care is not your medical expenses. It's not your doctor visits. It's if you need assistance with the activities of daily living. So if I can't get myself up and showered and dressed in the morning, if I can't feed myself, right, then I need someone to help. That's what long-term care refers to. There is long-term care insurance. There are services like Friends Life Care at Home, where it's kind of you pay in, and then if you need help, they try to help you stay at home, which is kind of cool. But that's another potentially huge cost. I've got one client whose mother is in a facility in Massachusetts with dementia. Her body is healthy and her mind is not there, and it's crushing and it's super expensive, right? That's long-term care. So those are the kind of things that come into play when I talk to clients about, how to look toward retirement. Mm-hmm. Anybody going to jump in with any comments, questions? I've got a couple more minutes, a couple more thoughts, but I want to make sure we address what you wanted to cover.
So Stephanie, all of this has been amazing information. For anyone that, let's say, is 30 and under, maybe if you could give a tip what they should maybe focus on versus anyone that's over 30, might have a little bit different priority of something to talk about when you were talking about the 4 L's.
Yeah.
Any tips for someone under 30 and over 30 would be great.
Yeah, under 30, I think, you're looking at cash flow, you're looking at building that emergency fund. And then, once you've got some emergency reserves or some, money to even out the cash flow issues, and you have gotten your spending below your income, then you've got a little extra and you can say, all right, what do I want to put this towards now? Do I want to make a longer term investment? So I think that's kind of the priorities, right? Cash reserves, cash flow, looking at your spending, making sure you're not abusing those credit cards. And then once you've got that under control, look towards, can you do some longer term stuff? Can you do some Roth IRA contributions? If you've got a great year, do you want to do something bigger like a solo 401k? And keep in mind all those retirement plans, they've got that 59.5 thing. So if you're saving for something that's longer term, but not that long term, just open an investment account, right? So you can get a little bit more return. There's going to be some risk, but you don't have those restrictions on when you use them. And then over 30, that maybe you're getting to the point where there are other people who are counting on you. And then, your planning needs change. That's when you want to look at, do I need some of those insurances? And what are my priorities, right? There's so many ways to spend money. And I think we all could do well by really sitting down and having that kind of heart-to-heart conversation with ourselves, with our significant others, if there's someone in the picture who shares your financial decision-making. What really is most important to me, given these unlimited numbers of ways I could spend my money? Where do I want to put it? Is it sending my kid to a private school? Maybe that's great, but then maybe I got to drive a clunker of a car. Is it seeing the world and traveling? Okay, then maybe I wear older clothes, right? So there's always going to be those trade-offs, and you've got to get to a point where you're comfortable with them, defending them to yourself, because maybe people might look at you and say, why is she driving a clunker of a car? I don't get that. That's okay, right? That they don't see your own plan. One of the quotes I love is, never compare your insides to someone else's outsides. So if you see the person with the fancy car and the great clothes, you don't know what's going on in their bank account. You have no idea their credit card limits or their retirement account or lack thereof, right? No judgment. They might have it all together or they might not, but don't look at your own internal stuff and compare it with just the surface of what you see in the neighbor's driveway or on social media.
Those are great tips. The other thing I learned is if you're able to, it tends to be cheaper to get some of those insurance policies when you're younger than when you're older. I had one when I first got into real estate, in my early, 20s, very low, a small amount, like $100,000.
Yeah.
And then recently my husband and I got new ones, and I couldn't believe how much more it cost.
Yep. Yeah, because insurance companies are pricing the risk, right? And the risk that you might die goes up every year you're older. So it's actually, if you can, when you're younger, get a life insurance policy in place. And what I would suggest is, if you're looking for a low cost, you want term life insurance from a good quality company that you could convert later to permanent life insurance. That's a whole nother conversation, but basically term insurance you're renting. It'll pay you if you die during the term of the policy. So if it's a 20-year policy and you die in year 21, you don't get anything. But you're covering that risk that you might die early. But if you buy it, like Dana said, when you buy it young, it's super cheap. And then in the future, you could decide to convert it to permanent. A question came in the chat, can you have multiple life insurances? Absolutely. Because my father is a life insurance agent, you don't even want to know how many life insurance policies my family has. Me, my husband, my kids. It's insane. Yes, you can have as many as you want. The only question you might get from a company, what they need to see is what they call insurable interest. So if your next door neighbor buys a life insurance policy on you, they're going to be like, huh? How was the next door neighbor hurt, right? Or if I buy a $75 million life insurance policy, they're going to get suspicious and be like, something's up. But besides that, yeah, you can definitely buy it as many as you want or need. You can drop them. A life insurance policy is a unilateral contract. So once the insurance company is on the hook, they can't change it. you can if you want to.
Oh, Norma.
So, all right. Anything else real quick? You're welcome, Kayla. I'm trying to keep an eye on the time and not abuse your hospitality for having me.
Stephanie, can you share just real quick, either Instagram or Facebook, or if you can, best way to contact you if people want to reach out one-on-one with you?
Absolutely. So my social media handle is at Sofia Financial, SOFIA Financial. My website is sofiafinancial.com. Email is stephanie@sofiafinancial.com. Yeah, feel free. Reach out. Any questions? I'll do a free 20-minute call with anyone, no problem. I also offer like a 90-minute consult, which I do charge for, but it's not a sales pitch. Really trying to help you get answers and direction on a couple key questions, and then all the way up from there.
Awesome. Thank you so much, Stephanie. This was so insightful. I really appreciate you sharing all your wisdom.
Absolutely. Happy to do it.
Thank you so much.
Thank you, Stephanie.
You're welcome. Take care, everyone.
Bye.